Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Senior Fund Analyst Pete Brunt to talk about fees. Hi Pete.
Hi Emma.
So some positive news from Franklin Templeton. Franklin UK Equity has seen its fees cut considerably and in turn Morningstar analysts have upgraded the fund.
That's right, yeah. So it was a decision taken quite recently to cut their ongoing charge from just over 80 bips down to capping it at 55 bips. So it could actually be lower than that. It's capped at 55, which is really quite a big cut. So we view that positively.
And let's take a moment to talk about the importance of fees. 30 basis points may not seem like much, but actually compounding has a big impact.
It certainly is, yeah. So if you were to take the sector as a whole, it's significantly cheaper than the median fee, which is looking at clean share classes, post-RDR, roughly 90 bips. So it's really significantly cheaper. And as you know, we've done research that's looked into this in the past, and it's one of the strongest predictors of outperformance over the long term. So if you were to take funds with the fees in the cheapest quintile, they are more likely to outperform those in the most expensive quintile over the next 5 years.
And you mentioned there what the average fee is for this sector. It's 90 basis points. Are there any other fund houses that are under that, though? Yeah,
there's a few, and one that is in the news at the moment, Woodford Equity Income. That fund has also got fees that are lower than the average. The most commonly available share class is trading at 75 bips, which is obviously cheaper than the average. So we take a positive view on that. What's interesting about that is they've also taken a move to change their fee structure. So they've now incorporated research costs into their annual management charge. So their ongoing charge is the same as their annual management charge. So, they're really going for transparency in terms of what investors are actually paying for when they invest in the fund, which we also take a very positive view on.
So you've got two big fund managers there, Woodford Equity Income, among the biggest in the sector, taking a very progressive approach to fees. What does this mean for the rest of the UK equity sector? Can we expect others to be dragged down with it?
Well, obviously there's been pressure not only from these guys that we just mentioned today, but also from ETFs and passive funds to bring those costs down. And I think investors are now looking, with these two funds that are leading the way, investors are now looking for others to follow suit. So I think we should be seeing other fund houses take serious steps to decrease their fees going forward.
Positive news. Pete, thank you very much.
My pleasure.
This is Emma Wall from Morningstar. Thank you for watching.